This might be the most important video we drop the rest of the year. What's going on, YouTube? My name is GT, and if you're new to this channel, we provide meaningful information around fitness and finances through interesting conversations like the one we're going to have today. And we have a lot to talk about, and we're going to get right into it. The United States economy, the stock market, S&P 500, hit a new all-time high about a week ago at $667. This market continues to defy gravity, and despite everything from tariffs to drama on the other side of the world and everything in between, the labor market, economy, this market continues to rise. However, we are approaching a very critical point in the history of the U.S. economy. 2 weeks ago, the Federal Reserve made a historical decision to cut interest rates. But it wasn't only that they just cut the interest rates, it was why they cut the interest rates, which was fascinating. Up until recently, the Federal Reserve used inflation as the barometer as to know when to cut or not to cut interest rates. About a month and a half ago, the Federal Reserve expressed extreme concern about the labor market in the United States. What's happening is that people aren't getting hired as quickly, and at the same time, they're not necessarily getting fired as quickly. But inflation remains elevated, and it's not really moving down that quickly. So it puts us in a word that is called stagflation. Inflation remains elevated, and jobs continue to show signs of weakness. What that creates is a very tricky situation in our U.S. economy, because if you cut the rates, this could continue to overheat the economy, and if you don't do anything, the job market can continue to fall. So they made a decision to cut the interest rates by 0.25. Now, there are a lot of things that could come from this. Number one, these companies that were struggling to barely make it by now have a little bit of reprieve. But we are seeing right now, over the last 6 months, the increase of big corporations filing for bankruptcy and closing. Just today, Starbucks announced that they're going to be closing stores across the U.S. and 900 people will be getting laid off of their company. We are seeing countless companies coming out with certain updates like this. So it bodes the question, where in the world are we going with our U.S. economy? First thing I will tell you is that we are right now due some sort of a short-term pullback in our United States economy, and I think we are already seeing that. The key level at the SPY, ticker symbol SPY, is $665. If we stay above $665, we remain on the uptrend continuing forward. But what has happened over the last 4 days is we have not been able to reach nor exceed 665. And what's actually happened is, day by day, we have been slowly drifting further and further away from 665. I believe historically, though, we have seen that the month of October has been a good month for the stock market. I believe that next month is going to be the exact opposite. I believe we are going to see the stock market continue to pull back as low as potentially $645, if not further back. We could see in the short term a 10% pullback in the SPY from all-time highs. So if at 665, that means that there is a possibility that the SPY can revisit $600 from here as early as the next month in October. I don't believe, though, that this market is ready to crash yet. I do believe we are going to see a reversal from there back to all-time highs and exceed all-time highs before the end of the year. Now, of course, could I be wrong? Of course, none of this is a suggestion for you to buy, sell, or hold anything. This is just my assessment of what we are seeing in the market and how I'm operating, investing my money into the market based off of these strategies. And our financial community, Financial Freedom Builders, is emulating the same exact strategy and have made a ton of money off of this thing. But once we reach all-time highs at the end of this year, I do believe that in 2026, all of the pending cracks we have been seeing in our economy over the last year and change are going to start to manifest itself next year. And so what I would give you guys at a word of caution is I would extremely consider taking action in getting yourself prepared for all possible outcomes: layoffs, a stock market crash, cybersecurity, potential rumor of war, in the country, out of the country. So I think there are all possibilities on the table going into next year. And it is your responsibility for your family's benefit and future to start thinking of a plan now while things are still relatively stable. I do believe, though, going into next year, we're going to see cracks. But it won't be all things in the market will crash. There will be sectors, companies, and industries that will do well even though the market is pulling back. And if you want more information about that, what I would tell you is on the comments below, comment or DM the word money, and we will connect with you to provide you one or two stocks to consider getting into and things you can do to hedge yourself as to what we're going to see as the pending situation in our U.S. economy. If you like content like this, again, be sure to hit the like button, subscribe to this page, share this video with someone you know, and if you like this video, we're going to love the next one. Talk to you later.